We are live. Let's get it going.
You can't solve your financial problems with the same kind of thinking that caused them. These words will change your reality because poverty can't survive in a dough chaser's mentality.
The Beat Majors.
So to all my dough chasers, it's time to get this party started now.
I like it.
With your host, Jason White.
Yo, what's up, Dough Chasers? It's your boy, Jason White, CEO and founder of Witness Riches. And today we are live for Dough Chaser TV. Tonight we're talking about 7 smart ways to improve your credit score. As you come in, I want to know who you are and where you're from. Represent. We're going to be sharing information that's going to help you continue to improve your credit score. Okay. We got Desmond from Florida. How you doing? Welcome. We got Mr. Leach. What up, though? Straight out of the D. How you doing? As you come in, let me know who you are and where you're from. So it's important that I continue to share information that's going to help you transcend financially. Okay. Witness Riches is a financial improvement company, and our whole mission is to help our community take their finances to another level, transcend, okay? And in order for us to do that, some of the ways that we help is through helping you get a hold of your credit, okay? We have a credit repair service called the 700 Club, and that basically inspired Dough Chaser TV because I get a lot of questions. People are asking me, how do I fix my credit, Jason? How do I repair my credit? How do I dispute with credit bureaus? How do I build my credit? How do I raise my credit score? How do I manage my finances? All this stuff, right? And the reason Dough Chaser TV is here is to spread awareness, to spread strategies, information that's going to allow you to take your finances and your credit to the next level. And tonight we are talking about how to improve your credit, okay? Stephen Williams from St. Louis, Roderick Streeter from Florida. How you doing? As you come in, let me know who you are and where you're from. We are live on Facebook and YouTube. So make sure you like this video, share it with your friends and family, and subscribe. Follow the page. I would definitely appreciate that. So first and foremost, let's go into the first smart way to improve your credit. This should be an obvious answer. And the first thing that you want to do to improve your credit is you want to pull that credit report and you want to pinpoint all of the negatives that are hurting you, right? And especially if they have occurred in the last 36 months, they really have a big impact on your credit score, okay? These particular accounts, what I want you to do is I want you to dispute these accounts, all right? Now, a lot of you are wondering, Jason, well, if it really happened, can it get deleted? Well, this is how the credit reporting game works, okay? The credit bureaus, we have TransUnion, Equifax, and Experian. These are informational companies, okay? These are not government entities. These are informational companies privately held on Wall Street that their whole business is to provide information about you and your payment history when it comes to dealing with debt, okay? And companies use this information to either market new lines of credit to you, or they use it to take advantage of you, all right? They know that you are living a paycheck-to-paycheck lifestyle. They know that, if an emergency were to arise, the likelihood of you being able to use your own funds for that is low. So what they do is they use that information about you and how you manage debt. If you're good at it, they offer you great programs. If you're bad at it, they're going to offer you information where it's going to take advantage of you. And the way they take advantage of you is they specialize in subprime lending, and the interest rates are going to be ridiculous, right? However, the reason I'm bringing this up is the whole reason credit bureaus exist is to offer a way for you to obtain credit, okay? And it is your consumer right to make sure that the information on your credit report is reporting accurately, okay? So though you may have a account on your credit report that shows late payments, okay? What we want to make sure of is with the credit bureaus, it's reporting 100% accurately. Meaning outside of those late payments, is reporting everything else correctly. Is my balance correct? Okay. Did it skip a month in the payment history? Okay. Is my credit utilization really reporting accurately? Is this really helping me or is it really hurting me? We want to challenge this and we want to make sure that the company reporting information about us can verify everything. Okay. And if they can't verify it under the Fair Credit Reporting Act, this is now in violation of that law. Because at the end of the day, your credit has to be accurate. This is hurting your credit worthiness. And if it's showing information that's not true about you, then it's hurting your ability to progress in life and use credit. And because of that alone, it either needs to be removed or repaired to a better standing, okay? So yes, you may have negatives on your credit report that actually truly occurred. But what we're challenging is, are they reporting accurately? Okay. Yes, it's a late payment on my credit report, but I just want to verify that this information regarding this account is 100% accurate because this is hurting my ability to get approved a line of credit. And I'm worried about this. I just want to make sure that it is reporting correctly. That is your American right to verify information on your credit report. Okay. So that's what this whole strategy of disputing negative errors is all about. We want to verify that it's reporting accurately. And if it isn't, and it's a negative account, it can get deleted. Okay? So that's one smart way to improve your credit score is through disputing them with the credit bureaus in hopes that 1, 2, 3, 4, 5 accounts get deleted because they are impacting your payment history in a negative way. And we need to get that fixed, okay? So as you come in, let me know who you are and where you're from. We got Darnell Anthony from D.C., Michael Stewart. He said he's a few days from joining our service. Can't wait to serve you, brother. And then we got Muriel. How you doing? So we talked about the first smart way to improve your credit score is, of course, disputing with the credit bureaus. The second thing that you can do to improve your credit score is to add missing accounts that are not reporting, okay? Now, what do I mean by that, okay? You have your car note reporting, you have your mortgage reporting, you have your credit cards reporting, your student loans reporting. You have all of these accounts reporting. But what about your cell phone? What about your light bill, right? What about your cable bill, okay? Some of your providers, they have the ability to report to credit bureaus. And a smart way to improve your credit score is through positively influencing the 5 components of your credit score, okay? And 2 components that I am focusing on right now would be the first component, which is payment history, and then the 4th component of your credit, which is credit file mix, okay? Together, payment history is 35% of your credit score. Credit file mix is 10%. So we're talking about 45% of your credit score, okay? So with you having your phone bill reporting to your credit report, that's going to add 24 months, 12 to 24 months of positive payments, okay? That's going to help your payment history. But here's the trick. If you are someone who does not pay your cell phone on time, don't ask for them to report your payment history because they can add the payment history, but if you're not paying the bill on time, they're going to add late payments to your credit report. That's not a smart idea, okay? So the thing is, we want to be strategic with our efforts, and it's only smart if it's going to benefit you, okay? If you're not paying your electricity bill on time, don't ask them to report that payment history because it's going to report late payments, okay? However, if you are someone who pays those bills on time, that's definitely beneficial if you got that payment history reported, okay? That's also going to positively influence the credit file mix because that's considered an open account, okay? Not too often do open accounts report on your credit report, and that's a great way to positively influence the credit file mix component of your credit score and also positively influence the payment history component of your credit score, okay? But we only want to add those accounts if we know they're going to report positive payment history. Now, not all not all providers, service providers report payment history, but you may get lucky and your service provider may actually report it. But there's nothing wrong with asking, okay? There's also different services that can get your cell phone or your light bill or your rent history reported. But I want you to keep in mind that the history that we want reported is positive history. So if you don't have a good track record with your service providers, don't ask them to report that, because if they report the late payments too, it's not going to help you, okay? All right. So as you come in, let me know who you are, where you're from. Let me get some love. Like this video, share it with your friends and family. Subscribe to the channel, like the page. I would definitely appreciate the positive feedback, y'all. Let's go to the third way to improve your credit score. Now, to some of you who's been following us, this may be a given, but there's a lot of you who are new to the channel and you may not have this understanding, okay? Let me see. Latrice, how you doing? So as you are working on improving your credit score, a lot of people, they hit us up and say, man, I want to pay down my credit cards, but which one should I start with? Start with the account that has the biggest impact on your credit, okay? And the biggest impact on your credit are credit cards, all right? Credit cards have the biggest impact because not only do they impact payment history, but they also impact the second component of your credit score, which is credit utilization. Together, that's 65% of your credit score, okay? So what you want to do is you want to begin to pay down the highest card balance, okay? I have written down the highest balance, but we want to separate the accounts. I don't want you paying down the highest balance overall. I want you paying down the highest credit card balance overall, okay? Because you may have a student loan for $50,000 and you may have a credit card for $10,000. The thing about the student loan is that balance information isn't hurting your credit score. Only the payment history is hurting your credit score or helping, right? But with credit cards, the payment history and the balances hurt you. And what we want to do is we want to find a way to get our credit utilization lowered as quickly as possible. And the quickest way to do that is to put your emphasis on the highest card balance and start paying that down. Because as you pay that down, you're going to positively influence your credit utilization. And that number is also going to shrink. And as that number shrinks, your credit score will rise, okay? So the third thing that you want to do is you want to make a real big emphasis on paying down your credit card highest balance, okay? That should be your main focus moving forward, okay? What's the fourth thing that we want to do? The fourth thing that we want to do is when we're paying our credit cards, we want to pay at the right time, okay? Paying at the right time is very important, right? You have what is called a statement date, and then you have what is called a due date, okay? A statement date is the date in which they figure out the balance, and that's the amount that you are that is due at the next billing cycle, okay? Now, the thing is, when that statement balance comes out, that's the actual balance that reports on your credit report, okay? So it would make more sense to pay the balance or pay as much on the balance prior to that statement coming out, okay? So let's say that your statement date is the 28th of every month. Okay, the 28th is tomorrow. That means that whatever that balance is right now is going to be the balance that reports on your credit report. Well, what I will recommend, if you want your credit utilization to be as low as possible, I would recommend that instead of waiting until the due date to pay the bill, pay it the day before the statement date. The day before, okay? Because as much money that you apply to that account the day before, it's going to reflect on your credit report. And a lot of times people wait until their due dates to pay the bill. But the thing is, if you continue to use your credit card after the due date, the balance that is going to report on your credit report is the balance that you cultivate until the statement date. So it's not going to help you as much as paying the day before the statement date, okay? Now understand, there is still a minimum due by the due date, okay? But if you pay it before the statement date, that's going to fix that problem for you. Okay? That's huge. That's huge, okay? A lot of people don't know this, but the statement date is the date that you want to keep an eye on. Jason, man, I just paid my balance all the way off on the due date, but it's still reporting a balance. Yeah, because the balance that reports is not the balance that is there on the due date, but the balance that is there on the statement date. All right? So we want to put our attention towards that particular number, okay? If you do that, you're going to see a tremendous difference with your credit utilization. And as you get that lowered and you focus on the statement date, you're going to see an increase with your credit score, okay? The fifth thing that we want to do to improve our credit score, okay, is we want to add variety, all right? And what I mean by that is you may be someone where on your credit report, the only thing that you have reporting are installment payments. You have car notes, you have mortgage, you have student loans, you have a bank loan that you have, okay? All of those are considered installment payments, right? You can add more variety by adding a revolving account. So this is my rule, okay? I want to say this correctly because I don't want to confuse you. But for every installment account, you want to have one revolving account up to 4. You want to have at least 4 revolving accounts reporting on your credit report. All right. I would rather you have 4 revolving accounts on your credit report and 1 installment. I would rather you have that than having 4 installments and 1 credit card, 1 revolving account. Okay. We want to flip it around because the revolving actually influences your credit more. Got to be strategic, okay? So minimum on our credit report, what we want to have is at least 4 revolving accounts. 4 revolving accounts and 1 installment is a good credit file mix. 4 installments and 4 revolving accounts is a good credit file mix. 4 installments and no revolvings, that's a bad credit file mix because there is no mix. Okay? Those are the 2 different kind of accounts that you can have on your credit report. You want to make sure that you have at least 4 revolving accounts. All right? By you adding more variety to your credit report, you're going to influence payment history more, and you're going to be able to have a bigger impact on your credit utilization as well. Adding that variety helps your credit. All right. Number 6, a lot of people don't practice this as often as they should, but with you having 4 credit cards on your credit report, every 6 months minimum, you should be reaching out to your credit card providers and saying, hey, I've been with you guys for 6 months. I've been with you guys 3 years. 10 years, whatever the situation is, do I qualify for a limit increase? Okay. If you have a $1,000 credit card and it's maxed out at $1,000, your credit utilization is 100% right now. Imagine if you had that same credit card and you contacted the company after 6 months of being with them and asked for a credit limit increase, and they doubled your limit. They gave you a $2,000 line of credit instead of $1,000, and you still had that $1,000 balance. Your credit utilization overnight went to 50% by that simple gesture alone. It's simple. These are ways for you to lower your credit utilization without you actually paying for it. And how you're paying for it is your loyalty with the company. Highly recommend that you take advantage of this. If you've been with the company over 6 months and your line of credit has been open longer than 6 months, when was the last time you asked for a favor? When was the last time? If you're with Capital One, on their website, they allow you to request a limit increase, okay? You can call them and request a limit increase. If you have a Chase card, whatever kind of credit card you have, you can contact the company and request a credit line increase, okay? I recommend that you do this every 6 months. Every 6 months. As long as you're paying that bill on time and you're working on paying down the balance, there's no reason for them not to give you some kind of increase. Sometimes they'll tell you, hey, we can't give you an increase on this card, but if you apply for our sister card, you may have a Capital One secure card, and they may say, hey, if you apply for the Capital One Platinum on that card, we can give you a bigger line of, a bigger limit, right? I have no problem with that, especially if it's going to help your credit utilization. Now, understand, if your credit score is a 580, you shouldn't be applying for an unsecured credit card right now because the likelihood of you getting approved is low. And I don't want you wasting that inquiry, okay? Still continue to work on paying down your balances. But once your credit score hits a 640, 680, yeah, definitely give that introductory credit card a shot if it's available, if they recommend it, okay? But asking for that credit line increase is critical. And getting it on one or two of your cards, you may not get it all the time, but if you're persistent with that, an increase, once or twice a year will go a long way, okay? And finally, the seventh thing that you can do to improve your credit score is to set yourself up for success. A man's greatest strength, man or woman, is to know your weakness. That's your greatest strength. Because once you know your weakness, you know how to avoid being weak. If you're smart. For me, I have a weakness when it comes to junk food, okay? Now, when it comes to food, I'm stupid. So, of course, I don't set myself up for success all the time. I don't surround myself, but I got people around me that, they have snacks. Like right now, this isn't a bad snack, but, I got some peppermints. But anyway, when it comes to food, I'm stupid. But don't be stupid like me. Be smart. Set yourself up for success. If you know that junk food is your weakness, you shouldn't surround yourself with junk food. Okay? Anyway, the whole point is set yourself up for success, and a lot of people forget to pay their credit cards. A lot of people forget to pay their car note. They forget to pay these bills. And then what happens next is the bill reports a late payment on your credit report, and now you're, in a frantic trying to contact your creditor and ask that they remove that late payment. Well, a way that you can set yourself up for success is you set your accounts up on auto pay. Okay? You set your accounts up on auto pay. That will prevent your accounts from reporting late payments because now it's taken care of for you. You do those 7 things: dispute negative errors, add missing accounts, pay down your highest credit card balance, pay your credit cards on the statement date instead of the due date, add variety to your credit reports, ask for credit line increases, and set up auto pay on your accounts. These are 7 smart ways to improve your credit score. Over time, you do these 7 things, your credit score is going to increase, okay? Hopefully that's been helpful. If it's been helpful, please like this video, share it with your friends and family. If you're on Facebook, share this video right now on your page. I would definitely appreciate that. You're on YouTube, please subscribe to the channel, like this video for me. I would definitely appreciate that. Let me see. We got some questions. Darnell Anthony asks, I have some medical collections that keep going up. Why are they? And they're some years old. Collection companies illegally add interest onto your accounts. Of course, if they're adding interest on your accounts and you don't have an agreement with them, that's illegal. So I wouldn't be too worried about the balance is going up. That's something that you can actually dispute and challenge. But I would definitely recommend debt validation for that aspect. Dion from Houston, how you doing? We got King Tool from Chicago. We appreciate that. Thank you for joining us. Anthony from Virginia, how you doing? We got a question on Facebook. Let me see if I can check that out really quick. Bear with me one quick second so I can pull up that question. All right, let me see here. Hopefully you all are enjoying your day. If you have any questions, feel free to ask right now. I may not be able to get to everybody's questions, but I'm going to do my best to answer them. Let me see here. So Adriana asks, how am I? I'm doing well. Thank you for asking. She has 2 questions. There are many credit repair companies out here. What makes your company different from the rest? Also, how much is your fee for your services? Okay. So Adriana, one thing that makes my company different from the rest is engagements like this. The typical credit repair company is not going to give you free game to improve your credit, right? They hoard that information and they make it nearly impossible for you to understand how credit works, how the dispute process works, and they manipulate you to joining their service and drag you along the process, okay? In my program, I have a YouTube channel where I have 200 plus videos of free information on how you can fix your credit yourself, okay? Our program is a program for people who lack time or really don't want to take the time out to learn how to fix their credit, and they'll rather expedite or cut that learning curve in half and expedite their progress by hiring professionals like us, and we basically do it for them, okay? In our program, we dispute up to 30 negatives, meaning that there's no dragging you along the process. We're trying to get you in and out as quickly as possible, and one of our greatest strengths is our ability to be transparent. In our program, we don't say that we're going to get everything deleted in 45 days. 1, that's unrealistic, and then 2, it's against the law, right? We don't break the law around here. We do things through the book the right way, and we dispute accordingly to the Fair Credit Reporting Act, the Fair Debt Collection Practices Act, and the Fair Credit Billing Act, okay? We basically use that information, build up a case, and try to help you get results. And if we can't help you, we do offer a 90-day money-back guarantee, which is probably one of the biggest differences between my company and competitors. If our service doesn't work for you, if it's not working, if we're not doing what we said we're going to do, nothing's happening for you, we don't say, hey, shot of luck. We say, hey, it didn't work. We have a 90-day money-back guarantee. We'll honor that. Okay. The good news is we're pretty good at what we do, and that rarely happens. But when it does, we honor it.
And only licensed people in this city.
Well, yeah, she's not actually in the city. But yeah, so, you're dealing with professionals. We have information that we're willing to share for free, and we help our clients get results, okay? So I would say those are the biggest differences between us and the rest. And our monthly fee, we have the enrollment. Right now, we have a deal going on where you can start credit repair for just $19.99 for the first 30 days. And then month to month after that, it's only $74.99 to maintain our program. We pride ourselves on making it easy for people to work with us and allowing people to maintain our program at a very affordable rate. Okay? You're going to find in our industry, our rate is probably one of the most affordable. Okay? I'm not going to say the most affordable because I don't know everything. But out of the 100 plus companies that I have examined myself, we're top 5. All right. Latrice asked the question, can you build after bankruptcy? Yes, you can build. Bad credit is not permanent. You can start today and start building your credit again. Okay. Yes, you can rebuild. All you have to do is begin to work on positively influencing the 5 components of your credit score: payment history, credit utilization, length of history, credit file mix, and inquiries. You positively influence those 5 components, your credit score will slowly, gradually improve like that. And the next thing you know, you sitting in the 700 club chilling with me. What's good? You're welcome. You're welcome. Okay, let me see here. Deion Davis asks, what about certain creditors who won't accept your affordable payment plan for them? Well, unfortunately, you can't make them accept the payment arrangement. And in that regard, you have 2 options, okay? One, you bite that bullet and continue to try to negotiate with them. Or 2, you look into what is called credit counseling, okay? Credit counseling is basically nonprofit organizations renegotiating your terms for your accounts, okay? The thing about these programs is they're helpful for people who are behind on their credit cards, behind on their bills, and they need help getting caught up. But the thing about credit counseling organizations is they want the account to be as severe as possible, and the programs can take 3 to 5 years to complete, okay? Michael Stewart, is My Jewelers and New Coats Direct going to help with credit utilization? Yeah, they will help with credit utilization, but do your research and make sure that they impact all 3 credit bureaus. I know the My Jewelers, they do impact all 3 credit bureaus, but the New Coast one, I think that one only impacts 2 of the 3, okay? I know you guys are looking at my eyes right now, and these lights are super bright, plus I'm sleepy as hell. So bear with me. It has been a very, very, very long day. Desmond said, is it better to pay the smallest balance to the highest? Yeah, that is called the snowball strategy. I don't have a problem with that, okay? However, the snowball strategy is really a mind game. That's to help you get quick wins. But is it the best strategy? No. To be truly honest, the best strategy is to attack the highest interest card, okay? That's the best strategy because overall it's all about saving money. And by you attacking the highest interest cards, you're going to save the most money throughout paying down your credit card balances. They're both probably going to result and end at the same time, close, 1 or 2 months, maybe even 3 months difference. However, one will result in way more money saved because the interest has been attacked. Do your research on that. That's actually called an avalanche approach to paying down credit cards. Look that up. low key, high output asks, is it good to start credit repair even when you know you may have possible collections to show up in the near future? Yes and no. Okay. I want to say yes because you want to get started as soon as possible and not delay time. I would say no because if a collection does report on your credit report, it's kind of going to negate your progress, and it'll make it seem like you're paying for a service or you're working on your credit for nothing because your progress has been hurt. Okay. What I would recommend is that you get started, whether you sign up for someone or do it yourself, get started as soon as possible. And then in the process, try to pinpoint those collections so that, either you or a credit repair organization can help you negotiate some kind of settlement or challenge that, debt validation. Those would be my options for helping you. But that's a tough question because one is, a time thing, and the other one is a results oriented answer. So, but I would say the best approach is to get started as soon as possible and request that validation for those collections because that delays it from getting reported on your credit report until they can provide that proof. Okay. Let me see. Mr. Miller said, explain your method of getting 4 credit cards. I just got a letter from you all on this next step. So, yeah, you should have got an email regarding, applying for new lines of credit. But, yeah, so the goal with the 4-card strategy is to really influence your credit as much as possible, okay? With 4 cards, of course, you really get to influence the credit utilization because we're not dependent on one card. We have 4 different cards influencing that, okay? And in addition to that, 4 cards reporting in the span of a year, that's 48 positive payments that you just added to your credit report that you didn't have before, okay? So with you having 4 different cards in your credit report, you're going to see a real massive change with your credit score because you're doing a lot of activity you're taking on a lot of activity to fix your credit with just those 4 cards. Now, getting those 4 cards, do I recommend that you get them all at once? No. Do people do that? Yes. Does it hurt you? Not really, but it does. I just want to make sure that people, when they get it, it's affordable and they don't hurt themselves with inquiries, okay? And I usually recommend that people get at least 1 card every 3 months until they have 4. 1 card every 3 months until you have 4. That's my recommendation. Okay, if you get 4 cards today, just make sure you're going to get approved for all 4 of them because we don't want to hurt your inquiries. And if you have bad credit, meaning that the likelihood of you getting approved for an unsecured credit card, you need to be applying for a secure credit card. Okay, the difference is unsecured depends on your credit score. Secured depends on your ability to make a deposit first because they don't trust you because your credit score isn't good. So in order for them to report on your credit report, hey, we want to help you, but we need that money first because your history shows that you don't pay your bills. And last thing we want to do is give you $200 just to go waste. So if you want to rebuild it, put your money where your mouth is. And as you improve your credit score, your credit is a 680. Yeah, people are going to feel more open to giving you a line of credit without you actually having to make a deposit, okay? So those are the 2 biggest differences. Stephen Williams, Jason recently went to a car dealership and left with 17 inquiries. Dang. This happened a month ago. However, could those inquiries prevent me from a credit card approval? Yes and no. Yes, if the particular lender is not using what is called the FICO model. Under FICO, inquiries that are obtained from a car dealership within a week or 2 week span, they are supposed to count as 1. Okay. Now we've gotten responses from our clients who say Yeah, it's supposed to, it's supposed to report as 1. However, on my credit monitoring, my credit score dropped 15, 25 points because it's not reporting as 1. Okay. In that instance, because those inquiries have occurred on your credit report in such a short amount of time, yes, that can hurt your ability to get a credit card because the credit card company could be looking at you as if you are desperate. Okay. But that doesn't happen all the time. I would definitely challenge those hard inquiries for sure. Dion Davis asks, do we have an inquiry package? Yes, we do. Go to our website, the 700clubcreditrepair.com, and we do have an inquiry removal program specifically on inquiries as well. Omar from Brooklyn, how you doing? Thank you for joining us. Okay, so if you are someone who wants help and don't mind working with individuals like me and my team, we would love to serve you. What we're going to do is we are going to offer you all the ability to work with us. Start your first 30 days for $19.99. I'm going to provide you that link in the comment area of this video. Check it out, learn more about our program, and if it sounds like something that you're interested in, we would love to serve you all, okay? So give me a quick moment so I can add that in the comment area. Okay, that information is added to YouTube. We're working on adding it to Facebook right now. But, at the end of the day, none of you are obligated to sign up for our credit repair service. But you are obligated to show us some love. So make sure you like this video. Please share it with your friends and family. Share it on your pages. Subscribe and like us so that you can stay in contact and make sure that you get this information moving forward. Because at the end of the day, to be a dough chaser is someone who is improving their finances and gaining a financial advantage, and your credit score is the advantage that you want and need. Okay? Credit is power. All right? You can leverage that thing and expedite your progress in this world we live in. And as long as you use it responsibly, I don't have a problem with that. Okay? So what I want to do is I want to thank you all for joining me this evening. Again, my name is Jason White, CEO and founder of Witness Riches, and thank you for joining us and experiencing another Dough Chaser TV episode. I'm out. About to go home and get some sleep. Peace out, y'all.